We all know that Warren Buffett is matchless when it comes to investing, but as impressive as he is himself are his strategies. The Oracle of Omaha does not fail to surprise us. Each move he does is unexpected. This is clearly evident from the 13F filings recently released. The report unveiled all his big moves, including the major stocks he bought and sold. Among these are 3 stocks that hold special value, but what made Buffett choose them? Let's see in this video. Warren Buffett has taken a lot of flack in recent years for sitting on his cash as the market soared. All of that, of course, has altered this year. At the close of business last year, Berkshire's cash reserves amounted to a staggering $143.85 billion. At the end of Q1, that figure had dropped to $102.69 billion. This means that Buffett is on a shopping spree, a spree in which he spent a mind-boggling $40 billion. Starting off Buffett's shopping list is Apple. After seeing a drop in Q2, it was at the beginning of the most recent quarterly that Berkshire added to the holdings of Apple, which is the most valuable asset. It is interesting since it provides insight into how Buffett analyzes stock prices. According to him, $130 to $150 for a stock of Apple was fair. Thus, he bought it happily. The purchase of over 4 million additional Apple shares during the quarter brought Berkshire's total number of shares in the iPhone manufacturing to 894.8 million, making it the single largest investment the company has ever made. Warren Buffett disclosed to CNBC's Becky Quick the day after Berkshire Hathaway's annual meeting that he bought the dip in his top stock during the first quarter. Quick was informed by the rich investor that he's purchased Apple Incorporated shares for $600 million. The price of the shares dropped throughout the subsequent 3 trading days. According to the data, as of the 31st of December, the value of the holding was $157.5 billion, representing around 47% of the equity portfolio of Berkshire. This year, there's been a downward trend in the share price of the Cupertino, California-based company that manufactures popular consumer electronics products such as the iPhone, iPad, and Apple Watch. Concerns about supply chain constraints and rising interest rates have contributed to this trend. Throughout the course of the first quarter, it experienced multiple multi-day losing streaks. It has lost somewhere in the neighborhood of 12% so far this year. In his annual letter for 2021, Buffett referred to Apple as one of the 4 giants, adding that these businesses account for a very big percentage of Berkshire's assets. According to him, the company is second most significant in its cluster behind its insurers, and the CEO is the primary reason for this. In addition, Berkshire has received consistent dividends from the company throughout the years, with an annualized average of approximately $775 million. Berkshire began establishing a position in Apple in 2016 under the persuasion of Buffett's 2 deputies, Ted Weschler and Todd Combs. Even though Buffett has a reputation for avoiding investments in industries or firms outside of his circle of expertise, as of the conclusion of the fourth quarter in 2021, the multinational conglomerate owned 5.44% of the company, making it its largest shareholder. But Apple was not the only tech company the billionaire bet on. Buffett increased the company's position in Activision Blizzard by 6.35% too. After purchasing more than 4 million additional shares during the quarter, Berkshire currently has a total holding of 68.4 million Activision Blizzard stock. This was a really important talking point during the previous quarter, as Buffett openly said he was not purchasing Activision Blizzard for the long haul. Instead, he was placing a short-term wager that the merger transaction between Microsoft and Activision would be successful. Naturally, in the month of January this year, Microsoft announced that it would be purchasing the video game company for $69 billion, or $95 for each share. In a normal situation, this would lead the share price to increase to somewhere close to 95, reflecting the expectation that if the transaction is finalized, all of these shareholders will be bought out at $95. Now, the problem, however, is that even though the announcement was made, the share price has not increased to $95. In point of fact, it has been hovering around $80. There is very little space when an acquisition is finalized, and there is still a degree of unpredictability. But the disparity is approximately 20% as of the right moment. Therefore, it is quite evident that Buffett considers the gap be worth the possibility that the acquisition will not go through. That makes it the first notable activity in Q2, increasing holdings in Activision and keeping a lookout for a 20% return in a hurry. This is, of course, if the deal goes through. And lastly, we have the oil companies, the 1.42% gain in Chevron stock, and the 16.26% investment increase in Occidental Petroleum both indicate that Buffett has had an interest in the oil industry for some time. Many traders with a limited time horizon have recently entered the oil market. The distribution of oil has been severely hampered over the past year. It's unlikely that Buffett would engage in a short-term commodity play, therefore, there must be more to the story. Let's begin with Occidental Petroleum. In Q2 of last year, Buffett submitted 4 separate forms to the SEC, all of which said that he intended to increase his holdings in Occidental. The SEC required this form to be filed whenever an individual or entity changes their ownership of more than 10% of a publicly traded firm. On June 23rd, he was paying between $55 and $56 for shares of Occidental Petroleum. It's a nice sneak peek at how much Buffett is willing to spend for Occidental. The weird thing is, we can see that he has been buying even more Occidental as of the third quarter of 2022. So Berkshire had 158 million shares at the end of the second quarter. In fact, Buffett already controls over 20% of the corporation, as evidenced by the latest form filed on August 8th, showing that he currently holds 188 million shares. His holdings in Occidental are extensive. $10 billion in preferred stock and 83.9 million warrants. So Buffett did indeed buy a lot in the second quarter, but he is, in fact, increasing his investment in the third quarter as well. Of course, he also increased his Chevron holdings by 1.42%. Berkshire had 161.4 million Chevron shares as of the end of the quarter. It's fascinating to see the stake grow from 0.8% to 7.8% of the portfolio over the course of a year. Now, the investment success is tied to the cost of crude. Oil firms' capacity to turn a profit depends unsurprisingly on the cost of their product. Buffett almost never wagers on commodities. Then, what has changed to pique Buffett's interest in oil stocks now? Well, Buffett says he's not in the business of predicting commodities prices, but he knows a good deal when he sees one. He predicts profitable returns for stockholders. These oil corporations disclosed a revised shareholder return plan and increased debt reduction in the first quarter. This means buybacks and dividend payments. When we look at simply Wall Street's discounted cash flow analysis, we also discover that both of these oil businesses are undervalued despite trading at low PE ratios. But Buffett holds much more wisdom and knows what is the actual value and potential of a company. Well, this brings us to the end of the video. If you liked the video, please do consider subscribing and sharing so we can keep bringing you more content like this. Also, let us know your thoughts in the comments below, and we'll see you next time.